Well, howdy, folks. You are in store for an epic session of Webby Rambles on. We're going to try to get right into this as quickly as possible because we are going to be really going over the monster stock of all monster stocks, Qualcomm. And this is the stock that I believe Bill made more, probably substantially more money on than any other stock in his entire career. And he made a ton of money on a ton of stocks over the decades. This one have been saving and saving and saving, and just wasn't sure when to do it because it's kind of the holy grail. You kind of don't want to touch it. I remember, Eric Clapton, telling stories about when he was going to cover a Muddy Waters tune, Hoochie Coochie Man, which is, thought of as Muddy's like, ultimate tune. And he didn't want to do it for the longest time, just out of respect. And that's how I'm treating this one because, I'm going to walk through how I would want to study it and would have wanted to trade it. And this is how Bill marked it up, starting off at this cup with handle down here as he marked it, saying to buy, um, add, add to it around here, add on these pullbacks, and then add on this out of here, and then ultimately sell it, at the top. And so, and recognizing that, that climax top up there. So we are going to tackle this the same way that we've, tackled our other ones from the Webion series, the model book series, and we're going to be leaning heavily on the quicksand and Grateful Dead rules, which is something that by now, if you're a regular viewer, you should know about. But if this is your first time, you're going to want to go and probably watch that video first so you understand the ins and outs of it. So let's just go to that website real quick, or to my YouTube channel, and let me just pull it up just to show you where that's at, plus some other housekeeping things before we get into things. But I'm going to try to be quick with this today because we have so much to talk about. Okay, so here is the YouTube channel, and I've put things in playlists to make it a little bit easier for you to find things. So the Hanging Out series, at this point, there's I'm not sure if that one is. This one hasn't been released yet. This is mine with Bob, and wow, that was such a treat, and of course with Don and Joe, those were just great. Then I've got this other playlist. This is for just music or podcasts that I'm on or podcasts I'm interested in. They could be stock related. A lot of it's music related, but it's just things to. This is the kind of what I use. So if maybe it's something I haven't watched yet and I want to watch it, I'll put it in there. So I thought some people might be interested. Lots of good blues stuff in there. The other one's kind of the miscellaneous. That right now just is how I use Market Surge. I would certainly watch that if if you use Market Surge. If you're thinking about using Market Surge, I'd watch that to see how I use it. Then these are my favorite. These are non-stock related. There's only two at this point. I have a few other topics I want to tackle shortly, but one on fear and how I dealt with fear in life. And I think you can learn a lot from that, whether you trade or never plan on trading. And then goals, and same thing there, kind of, how I look at goals and just really my journey, at least, the first part of it. And so I wanted to, just share that. And I think it's, hopefully very motivational. Then where folks probably want to go, and this is a ton of stuff. Oops, 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 stop. Okay. Um, Clearly, like a fourth grader can handle a computer better than me. So anyways, here are the ones in the general market series from the precedent analysis, which was the first one we did. Things like my take on the 21-day exponential moving average, something I really popularized over the decades. uh, a couple on the follow through day, looking at the aftermath of crashes and bear markets. And frankly, 2025, I look at it as a crash as well as a bear market. For some reason, folks, call it a pullback or whatever. I don't know what they're smoking, but whatever. Then let's see. The Webby RSI, which is something if we have time, we'll do a little bit of that today. I don't think we will. And then the power trend. If any of these, I would watch the power trend and the 21 day. Those would be the first ones I would do. And then I would do all of them, frankly. Then a model book series where this is going to be. So, we've got how to build a model book as well as whatever you're interested in first: Cisco, Apple, Google, Amgen, Taser, Chipotle, Priceline, eBay, and then another one that I just recorded yesterday that, well, it's probably going to be out by the time this one comes out. So that was JDSU that I tackled. Then my inventions. Oops. Uh, where do I go? Okay, just full view. Okay, so let's start at the beginning. My loss cutting strategy out there that's more for position trading. I would certainly watch that. How and why I created things like the composite rating, the growth 250, the IPO base. Again, the 21 day, the 3 month relative strength. Why I built all of those. The power trend, that's something I built with Justin and Chuck. Then again, the Webby RSI, one of my inventions, and probably if there's any of these that you view right away, it would be this one, number 20, the Quicksand Grateful Dead. In fact, I'd probably watch that one before you watch this, unless you've watched a prior model book one. And then the one, Pattern Rack. I mean, that took me over a decade to build that, and that's always kind of well, I'll just circle back to that in a second. And then if you just want the full list of them, just go to here, go to all of these, and you can sort them in order, and then you've got all of them in one place. If you want to just if you wanted to do it in order, that's fine. These are things that a lot of them you want to watch a few times. Let me stop sharing for a second, but with that pattern rack, I'll just say, the pattern rack that you see in Market Surge, that took me over a decade to build, on my nights and weekends, as a kind of a side thing that I was doing. And when I say that to people, I always want to look at their face when I say a decade. I've yet to see anyone who's processed that. Everyone's like, yeah, okay, next, Mike. And they don't understand, think about something that you've been working on maybe on nights and weekends, and think about doing that forever, pretty much all nights and weekends for a decade. And, it was a big project, a big undertaking. I'm working on that again because we've got to we're making some changes to it. But anyways, hopefully you guys utilize that in Market Surge, because I think it's really powerful tool. So anyways, why this YouTube channel? I wanted to provide something that was not focused on the current market. That's something that I do at IBD. Monday, Wednesday, and Friday, I'm on IBD Live, which is a paid program that we have, and we talk about the current market. I go through my current trades. What I'm thinking, and so if you're interested in that, we've got that for you. As far as on the free side of things, every Friday, I do the Stock Market Today video that we call the SMT video with Ali. We spend about an hour, going over how I'm, looking at the market. Once a month, Justin and I do something for the Swing Trader product, a free video that goes out on YouTube, just kind of talking about the status of, what we're doing on Swing Trader, because I run Swing Trader with Justin. I pick the stocks, and he does all the hard work of marking up the charts and sending out the alerts and all this stuff in the background. And oh my God, that is a lot of work. That guy, he's a saint. That's why I call him the saint. But anyways, once a month, we the both of us just go on. And we try to do it the second Tuesday of every month, but just frankly, because I'm a geek and I thought ST, second Tuesday, and um, swing trader update STU just flowed STU. Maybe it doesn't flow as well as I thought, but I thought it was funny. And so that's what we try to do. But look, once a month we do that, and that is free. Um, so of course the firm has a lot of really high quality paid home studies that that I've done, like the IPO home study, market school that I did with Chuck and Justin, the chart school that I did with Chuck, the advanced buying home strategy that I did, as well as some other ones, and including there's a model book one that Bill did, and he walks through, and you can hear him for like 5 to 10 minutes on I think 20 almost maybe 25 stocks or so, where he walks through and does kind of what this is, and so for those who can have the money to afford it, we have tons of great tools. But I wanted something that was non-IBD related, um, because I wanted to take as long as I wanted on these, whether that was 45 minutes or 3 hours or more or less or anything in between, to say what I had to say at that point in time. And I couldn't do that under the IBD umbrella, because really then there would have to be someone who would have to sit and listen to me and edit it. And that's not cool, man. We are just swamped with stuff, and I couldn't put that on someone else's plate. So I'm just doing this on my own. I'm a one-man shop, man. So if you see it, if it looks a little shoddy for you, I'm not a video dude. I'm just a random dude. So sorry if the quality isn't up to stuff like what we do at work, but this is for free, and I wanted something for free out there that was high quality content. I could package this if I wanted to and sell it for a ton. Obviously I'd have to take out all my personal stuff and my music stuff and just go to maybe a 3 hour thing. We'd go down to 30 minutes or something, but um, and I could make a lot of money off of that, but I just did, I wanted to give back. I'm a big believer in karma, and, giving back to those who maybe, aren't in that position, as well as people who are worth hundreds of millions of dollars. I hope you're listening to this as well, and everyone in between. Because I know when I started off, just buying, Bill's book, was a big deal. Like 10, $15 or something like that would have been, well, this version wasn't around back when I was starting, but the other one, I had asked for it as a Christmas gift back in 1995, and so I remember like it was yesterday what it's like to be, really a penny pinching. And well, I'm still super, tight. But really, like I remember looking forward to, like, this local pizza place, Amici's Pizza, on like either Tuesday or Wednesdays. It was like a large pizza for $3.33. And it's like I would wait all week for that. And you can make that stretch over a few meals, And so that was that's kind of why I wanted to have this out there for free for everyone. Um, so regardless of your situation, if you're starting off, maybe you're in high school or junior high or something, I wanted something for you guys. Wanted something for folks who've been, maybe in their 70s or 80s or, whatever, and have been trading their whole life, and something that they could learn from, um, as well, because you can always learn. I'm always learning. Bill was always learning, and so I'm always open to learning from other folks as well. So that was half of the reason. The other half of the reason is, been dealing with some health issues, and they were really a product of being a workaholic for my life, and realized that I might not always be around. So I wanted to have something for my kids, to learn from me from trading, as well as some life stories. And they've heard a lot of the life stories, but not all of them. And maybe one day they would forget them, and I just wanted to have them somewhere. And I was going to record this and just put it on the cloud somewhere, but I was really paranoid that I was going to spend countless hours teaching to my kids, or really I don't know that they're ever really going to get into trading, and that's fine with me, but maybe their kids one day when they have kids, that they get into trading. So this is, something I wanted to have for, a few decades down the line, because they're 23. So I don't think they'll have kids for 7 or 8 years, and most likely, and it's kind of the norm these days. So it's going to be a long time, and I wanted something around, and I thought, wow, I don't remember, passwords for things for 2 or 3 years ago. So how's someone going to remember that? So I thought, oh, put it up on YouTube, and I take care of two things at once. I put something out for free for folks, as well as have something like kind of a legacy for my kids and grandkids to learn from. And maybe that's something that you want to do too. Like maybe you know, you're a great chef or something. You make some great meals at home, or you are a great lawyer, or you're a great school teacher, you're a great this or that, whatever it is, or you're a great artist, or like record something, leave it for your kids, for a legacy for your kids and your grandkids. But everyone has something special that they do, and you can do that, and then then it's around. Like, don't you wish you would have had that from your great great grandparents or your grandparents or what have you? So that's kind of the thought process here. And I really do look at every day as a blessing, and you don't know how many days you get. And so I wanted something here. And God, man, I was watching, I'm recording this on July 6th, and yesterday was the the big concert in on the other side of the pond, with the whole Black Sabbath thing, and just seeing, you know, uh, Ozzy in that situation, and just it's such a reminder to all of us that. Well, I don't want to ruin it for you if you didn't see it, but I mean, it's really, here you had Ozzy, and he can't even stand, and he has his health issues, and this is probably going to be his last performance, and it's very heavy. I would suggest watching some clips of that. I didn't watch the whole show yet, because I really wasn't needed to dedicate an entire day to it, and I'm in the middle of some stuff, and so I want to just watch. Guns N' Roses played, Metallica played. Obviously Sammy was there, and all sorts of great bands. So if you're into heavy music, heavy metal or hard rock or whatever, and that's for you. If you're not, man, it's not something you want to watch. But maybe just a clip of like some of Ozzy's stuff. But yeah, just a reminder, man. Try to make every day really count, and try to do something positive for the world, and that's what this series is about. It's something I'm just trying to give back. So we are going to tackle, oh my God, this monster move. So let's just show you how big of a move this was. I'm going to share with you. Okay, let's see. All right, so let's take, just to show you what a big deal this was, let's remove Qualcomm from here. Okay, so here are all the stocks. So this is for the year of 1999. So the end of 98 to the first trading day of 2000. And here's what you have in the top left-hand corner. So if you can't read that, let me just blow that up a little bit. So, NASDAQ at 88%, S&P up 18%, Oracle up 310, Microsoft up 69, Apple up 174. Wow, this is one that we just recorded. This was JDSU up 983%, and Schwab up almost 32%. Now let's add Qualcomm back and just see in the context what a monster move that is. It just dwarfs everything else. And so up 2,600, almost 2,700% during that same time frame. So the next closest thing was the JDSU. So that's why we're tackling this, and the move actually started a little bit before this. So yeah, just very, very impressive. So now let's see, we are going to switch gears, and we're going to go over to the chart itself. Okay, so here it is on on a weekly. Let's go out to a monthly, and let's go out to the current day. Just put this in context. Reset to current day. We'll unzoom. This is a monthly, and what you're looking at, the history here. So it goes public in 91. You have this kind of move over here. It looks like a big move, but on a relative basis, so here's your relative strength line, that was actually going down during that whole time. So it was really a laggard being pulled up by the bull market. Then you have this monster move that doesn't really look like anything on this chart, but it's well over 2,000%. And then this whole time where it took all this time to get back to even, which is why you don't want to just hold a winner and you want to use rules. And we're going to go over how I would look at this, and you could have your own way of doing things. There's not really a right and a wrong. There's just the right way for you. And I'm going to show you the right way for me studying this. And let's go out to like, just go to 2000 on the monthly, and let's switch over to the weekly. So we're going to be studying this move out of here all the way up to there. And now let me just stop. Now that you have this in your mind, let's just go back to how Bill marked it up real quick. I'm going to stop share, and we are going to share his way. Okay. So I don't remember if I said this at the beginning. This is the first one I was a little bit nervous about. And this is my take 3. Like I recorded like 5 minutes of each of them beforehand, and I kept on messing up because this is a big deal. Like, you don't want to mess with Bill's Qualcomm, but I'm going to mess with it because, I got to be real and show you how I would have looked at this. And I think there's a lot of room for improvement because, Bill and his PMs were up. I'm just going to stop sharing here for a second. So remember, I became a PM at the end of 99. He gave me money to run, and all the paperwork didn't get resolved until, I wasn't allowed to really put my first trade on until January 13th of 2000. So this one had topped, a week before that. So I didn't capture any of that move. Now, as a point of reference, in my personal account, I'm just saying what it is. This is just facts. I was up 1,640%. No, you're not using options, just, using margin like what Bill and the team did. And they were up, on balance, like 400 to 500% during that year. Now, obviously they had a lot more size, but I'll say when, like every dollar I had was every dollar I had in that account. Like those guys were, they had like, lots of money set aside, and they already had their houses paid for and things like that. Like it's a different amount of risk. So I always had to chuckle when one of the guys would say, "Oh yeah, well, what size did you do that on?" Well, I did it on all my size, like, so whatever it is that you're dealing with, that's what you're dealing with. And I think it's, more important, if you don't have a bunch of money set aside, a lot of these people would have, millions of dollars, set aside, out of the market. So like the risk you're taking on in the market is just a whole different animal. But anyways, it is what it is. So they were up 400 to 500%. I think, the range went from like up 100% to up 550% or something like that. And a lot of them, my understanding, I never looked at the sheets during that time because I didn't have access to it, but they were, up to 200% long Qualcomm during this move. So the stock was up over 2,000% for the year. You're going 200% long that one stock, so you're taking on that massive amount of risk. So the thought process should be you should be up 4,000 plus percent, right? Minimum, because if you understand compounding, like a lot more than that, but or at least 2,000%. But that wasn't the case, and so there was obviously stuff that can be learned here and handled better. And one of the things that I've said in some of the other episodes was and what messes me up all the time is going too heavy. For me, too heavy too quickly. Bill wasn't too heavy too quickly. He'd go heavy and then get really super heavy but do it over time. And that was where he was the master of that. No one was even close to him, at that. Like he would get to where he was going, um, you know, in his way of adding to things that were working. So maybe he starts off with a 15% position and he ends up with 200%. The 200% position, he's not doing that over a week. He's doing that over an amount of time. And that's a key thing if you're going to try to do that. But my having done super heavy concentrated positions when I was running money for him, because I was encouraged, that was kind of the way. He had no problem with that, as long as you were up on the stock. That I really think you have to have a much lower maximum. Now, for me, for these series, I'm saying a maximum of 25%. Now, for some of you, that might be crazy too deep. I'm not an investment advisor. I can't give you investment advice. If you want an investment advisor, go seek an investment advisor. This is just me trying to help out, passing on what I know for free. And it's also a sleep aid. You have trouble sleeping at night. You can put one of these on. They do the trick. But, the way I'm looking at it is you have to have a lower maximum so you can think, because I've been 100% plus in one stock and you cannot think unless you're just in denial. We all get there. But if you're really thinking of what can happen to you and you're on full margin plus in one stock, you can get wiped out, period. And so do you want to do that? So then you want to think like, okay, let's say a stock craters, how deep in the market, do you want to be, in that one stock? And so let's say you only hit your max position is um, 5%, then that stock goes to zero, counting fraud, blah, 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 goes down to zero in a gap. I mean, I've never seen that happen, but I've seen biotechs and stuff get hit, 70% plus in a day. So anything is possible. So then you've got to assume that anything that you put at risk can go to zero. So if that, even if it's highly unlikely, those things happen given enough time. So 5% goes to zero. Well, you've lost 5% on your account. 125% position goes to zero. Well, you're done. You owe money. So at 25%, like realistically, you're going to cut your loss before it gets too crazy. So I think 25% for an aggressive trader is about the limit that you want to get, because you always want to think, if this thing were to have like a 50% gap down, where would you be? 50% gap down on a 25% position. Well, that's 12.5%, roughly hit on your account. That's really painful, but you can live to fight another day there. So you want to find your max. So we're going to be using the quicksand, Grateful Dead rules. And I think that if Bill would have capped himself out at 25% in Qualcomm, that he would have actually made a lot more money during that year, because the risk involved in having to back away when things are coming down, because you have to manage risk, and then as they go back up, putting the gas back on. And that's what I do all the time. I'm adding to it, and then I'm having to subtract, and a lot of that is really a product of having too big of size. A big solution there is having less size. And I think this one will go out after the Webby Rambles on that I did with Bob. And that one, you should really watch, because, at least for his institutional work that he was doing, he was saying how his, max position was going to be, 5%. In his own account, he'll, trade up to 20% in a stock. And that's from a veteran who's been doing this, 20 years longer than me. And at one point his firm managed, $11 billion. So it's telling you from that mindset, that same thing. And then we had, Joe Fahmy on, and he was talking about how, for the money that he runs, that, he caps himself out primarily at 5%. So I think for most people, having a lower threshold than what Bill would say is going to work. Now, if you're wired like Bill, then then you can get away with it. But most people aren't wired like Bill. I'm not. I'm wired like me. It took me decades to figure that one out, man. That was a hard one to learn. So, all right, so we're going to get into this, and we're going to think in terms of our max position is going to be 25%. That's a key part of the quicksand Grateful Dead rules, is knowing where your max position is. And again, if you haven't watched those, because I'm not going to do a full recap on that, and I'm expecting that this at this point, because otherwise we're going to have to do a redo of the quicksand Grateful Dead rules every single time. So we are going to say 25% is our max, and our core position that we're using to hold a winning trade using those rules, the quicksand rules, is going to be 15% of the account. So from 25 down to 15, you can sell into strength, you can sell into weakness, you can sell however you want, willy-nilly, very specific, whatever. But that last 15%, we are going to use the quicksand rules. Now, with that said, and why I'm so excited to do this one is I just recorded the JDSU one, the VIAV one yesterday, and as I was going through it, and I haven't studied these ones from the late 90s for decades because it was such a unique time frame. It wasn't worth studying, unless we had another kind of, I don't want to say bubble, because I don't think we're in a bubble yet, but a major bull market off of a theme like the AI theme, And so if this plays out, it'll ultimately at some point go into a bubble. That's just what happens. Happened in the 20s, happened, it's just what happens. When that happens, you don't want to guess when that happens, because that's how people lost so much in 98, in 90, really 95 to 99, 2000. So many really smart, the smart guys and girls on the street tend to be folks who short. It's a lot harder to short. And those people, a lot of them really got their head handed to them in the late 90s, because on a valuation basis and all the metrics and things that they were using were telling you to short, really, right? That things were overvalued. But when you're in a bubble, things get a lot more overvalued than you would think. And so it's a whole different game. So at one point, we're going to be in that. So now's the time to study that, because there's nothing where you can make more money than in a repeat of the 90s. So we're going to focus in, until the market changes, we're going to focus in on a while and on stocks in the 90s. And again, these are ones that I haven't studied in forever. So I'm going to be learning a lot. And so with the JDSU that we just did, what I recognized, and I think that one is going to be released before this one, that that using the quicksand rules, you can use them on a daily, weekly, or monthly. And primarily I was, using them, on dailies and weeklies, just kind of depending on the stock and things. And I really don't like that it depends type of thing. So I really want to have some hard and fast rules that I use the daily until this date, until this happens, and then I use the weekly until this happens, or I use a blend of them. And so you're going to be in on this process. So this is kind of how I do research. And normally I do a bunch of the research and then I will release it. But I'm going to, in this series, you're going to see how this morphs as we're learning from the feedback we're getting from the stocks we're studying. And one of the things that we saw when I was recording the one yesterday was, if you use the daily for the entire move, and is a really, really massive move, is going to chop you up even when you have this huge cushion. And Bill was the best at having a cushion. A cushion meant like the stock is trading at $100, but your cost basis is $60. Like from 60 to 100, that $40, that's your cushion. And he was always aware of that. And he would say, well, they can't take that full cushion away from me in a day or a week, but that was prior to Reg FD and all the gap downs and stuff we have. But so he was always aware of that cushion, and that's what he would use. But that's a really squishy topic, your cushion. Like, how do you do it? So I didn't want to approach it that way, but I wanted to approach it with the relative strength lines, which are the quicksand, Grateful Dead rules. So with that said, we're going to be using those and switching over from a daily to a weekly. Now, my kind of base case right now is to use the daily for the first quarter, so 13 weeks. Now, we're going to start noticing, should we use that for the first 8 weeks, first 4 weeks, first 26 weeks? But our basic, you want to start off with kind of a thesis, like a ballpark. And you can change it wildly. It could be totally wrong, but right now our thesis is we're going to use the daily for 13 weeks. And again, this is for the quicksand rules, and then switch over to the weekly after 13 weeks. And when you have like a fine line like that, like one day makes this major shift, that's dangerous. So we will be doing this and be thinking of a gradual thing. So it might be that like, weeks 1 through 10 or 8, you use only the daily. And then from 10 to 13, you start blending the two. And after 13, you just use the weekly. Or maybe from 13 to 26, you're using a half and half. So that's what we're going to be thinking about as we go through. But then we're also going to have an or statement. And remember, these are to measure, using the quicksand Grateful Dead rules to measure or to get out, but you're only doing them when you have a gain. You're not doing them to get out of the starting gate. To get out of the starting gate, I have those other rules, the loss cutting rules that I have, but this is to manage a winning position. So with that, we're buying it in for the first. Right now, the first 13 weeks, we're going to use a daily, then we're going to switch over to weekly. But really, there should be an or statement in there. Or you make X amount of percent. It really should be X number of ATRs, like maybe 5. You've advanced, 5 ATRs or 10 ATRs or something. Like an ATR is how much it moves on average. So let's say, typically moves 5%. 5 ATRs, that would be a 25%. 10 would be a 50%. But for now, we're just going to think in terms of percents and then figure out which ATR, just because it's easier to do the research, and then we'll back into the proper ATR. So we're going to have an or statement, and this is something I got from Bill. He would always do or statements like this or that. His famous one was like a return on equity of 17% or after tax margins or pre-tax margins, at peak levels or up X amount, blah, blah, blah. So he loved the or statements. And I have a lot of or statements in the background of, the Growth 250 rules. There's tons of them there. So I'm a big fan of or. So we're going to say, we're going to use the daily for 13 weeks or until you're up 50% from the initial pivot. And then at that point, then we're going to switch over to weeklies. Now, at some point later, we'll figure out how to switch from weeklies to monthlies, but we got to do baby steps, a little bit at a time. So you're going to see this process evolve over coming episodes. And so I thought it'd be fun. I could just do this off on the side and then tell you, or you could kind of see, I want you to learn how to kind of like, at least how I think through these issues. And so that's what we're going to do. And so let's get to it for old timers, OGs, Olive Gardens of the world. No, I miss those breadsticks. Oh, they were so good. But yeah, doing gluten-free, can't do that anymore. Man, that's frankly, don't do the gluten-free thing unless your body tells you have to, man, because it is a drag. Okay, so we're going to study this move. Now, remember, as we go through, you need to be 100% intellectually honest, or just stop and go watch some, Black Sabbath or something, like don't watch this if you can't at least work on being intellectually honest. I know so many people who would be like, oh yeah, that's not bad because it's not bad because they see that it goes a lot higher. Well, that because is BS, and we don't do that here. So we are going to look at this and pretend like any day the stock could go up 100% or fall 50%, and we're going to treat it accordingly. Now, one of the things that let's just do this change date to the beginning of the move. Let's go to this week, January 8th. Okay, so here's how it looks like before it moves. And you can see it's been a laggard. And if you avoided these bases, you know, that's fine. And if you didn't avoid them, they weren't as that bad. I mean, that was a decent cup. Then it moved up and then failed. And that was a decent cup. I mean, it went from 34 up to 50. That was a good move. I'd take that. But you can see that with that RS line, it just really wasn't powerful. So it was that the market was going, let's pull up the NASDAQ for that same time frame. And the market is so much more powerful. So with the market, or even the S&P 500, if that's moving like that, why do you want to take the single stock risk of a Qualcomm? You don't, or you don't want to do it in a material way. And you can see that by this RS line versus its moving average, which is, of course, the quicksand Grateful Dead portion. So let's just go through until the buy point. Okay, we'll just go out another month. Just waiting for a buy. It's rounding out, but see how bad that RS line is? It's terrible. So even if you know the story on it, it doesn't matter. It's this great story, all the fundamentals and everything. Okay, it's starting to firm up. That RS line is starting to poke up. That's constructive, but still not there yet. Okay, and it comes back down. Just a dog at this point. Okay, now we've got a little double bottom here. Double bottom, that's your buy point, but it's sitting underneath this stuff, so it's hard to, without hindsight, say to buy that. Let's just start going out 1 week at a time. It's forming up a little bit. At least RS's line is above its move. Let's blow this up a little bit so you can see this better. That's probably good. Okay. I would say try to watch this on your TV or a really big monitor, not on your phone, or maybe not even on an iPad, because you really want to see the charts as big as possible. But maybe you don't have eyes as bad as me. So it had its double bottom breakout and it's coming, and it looks like it's forming a handle, double bottom with handle. And now the way it's kind of traced out, it looks like a double bottom with handle that's also a cup with handle. It's like there are times when things are multiple bases. So here's one bottom, two bottoms, up. So there's your first buy point. Now it's setting a new buy point. Okay, so now really nice in here. So we've recognized it on a weekly. Now your RS line is underneath here. So that is just, but it's a much nicer base than any of these other ones, just objectively. Like this was a decent base over here, and this was actually not really a good base, because look at this low closing range. These bases were wide and loose. Just this is the terrible base. This in here, this structure wasn't that bad, frankly. A little bit of a wedge there, but it breaks out and fails. But that's because the market is failing. So it's starting to actually perk up here. Let's go there. July 24th. Let's go to the market there. July 24th. Well, see, yeah, it was starting to perk up at the same time that the market came down. So that is telling. So I'd never noticed that before. So that's a little bit of your three-dimensional chess so it was really stronger than you think, because it was starting to go out of this much tighter. Do you see this structure versus all of this? So much tighter. Then forms this relatively constructive pattern. Not a lot of positive divergence in there, which is what we really saw with things like Schwab. The Bibble is trading. Look at, that's already up and out of there. Okay, so now we're going to go Let's go over to the daily. Okay, so now we've got, that is your buy point. Okay, your downtrend line, you're waiting for that to go, but this RS line is terrible. It's frankly horrible. Let's go one day at a time. Wow. It's hard to say that you keep those on the watch list. Like, just be honest, man. Like, why? The market is ripping like this, and this is a dog. It is totally a dog. Let's go forward. Still, it's underneath this 50-day. Let's look at the weekly. Yeah, RS line looks terrible. Really does. A little bit of a setup, tight action. Still weak. Here's the end of the year. Now, the end of the year, some funky things can happen at the end of quarters, end of months, end of years, end of half years. Like the end of June. Let's see. Okay, so the beginning of the year, someone decides to make a play in here. So it goes through its alternative pivot, and it's viable now because your RS line is moving back up, but not in a big way. You just got to be honest with yourself. Like, you're not going to buy a big position in this when, things like, Schwab had moves like that. Now, but keep in mind, Bill, and we'll do this one, Bill had made a bunch of money and ended up, selling into, the climax action of Schwab and AOL. AOL is not in the database, but let's go back to Qualcomm. All right, so here's the start of our breakout. And so remember what we said, this is day one, and that's on our loss cutting strategy. This is day one, and this is day zero. So we're going to really pay attention to the lows of both of those days for our exit, because our assumption is this is going to fail. Like, if your assumption this is going to go up 2,000%, you're like, turn off. Just turn it off, man, because, dude, that's not intellectually honest, and you know it. So that's in the back of your mind. This goes up 2,000%. So you're looking and seeing all these beautiful things in there that aren't there. They just aren't there. And now it's firming up. So the character is starting to change because this is moving up nicely. And you can tell that by that RS line is moving up nicely, but still, it's still a dog, right? It's, now 3 days. Now that is looking interesting, because when was the last time we saw really power like that? So for this 3 days in a row at the turn of the year, someone's making a play. So to me, that's someone who had, cashed in a bunch and has some, maybe they cashed in their Schwab or whatever, and now they're rotating in over here. There's a rotation happening. Sometimes rotations just, go up to 60 and fizzle and die. But now you're getting a little bit more serious about it, because your alternative pivot was here. Another alternative pivot, your standard or a horizontal resistance line there. Same thing here. So you gave me some pyramid points, but at this point, I'm probably only going to have like a 7.5% position. But now I'm thinking, well, maybe the character has changed a bit, and I might want to go bigger. Okay, so now I'm adding a little bit. I tend to add as things are just moving up, for right or wrong, for better or for worse. So, so I'm adding. So maybe I'm making that a 10% position at this point, because it's getting ready to go through its standard pivot. And just kind of mediocres there, but I would add a little bit. Maybe it's a 12% position, and probably buying it at the highs of the day, because you want to, when a stock comes back down and closes near the lows or whatever, you don't want to say, oh yeah, you wouldn't have bought it there because of the bad close. Well, what would you do intraday? Unless you only trade at the close, which there's a lot. That's a whole topic in itself, and you probably do a lot better. I'd probably do a lot better just doing that. Okay, now, so remember, here was our original stop loss was down here. Now we've raised it up, really probably to whatever our cost basis is, or at least the 50 or the 21 day here. But now we've added, I've probably made this a 15% position at this point. Let's go to the weekly before this week. So, up 6% that week, up 16% that other week. Oh yeah, then I definitely at least have a 15% position at this point. And remember, now, well, we'll get to that in a second. That's normal. That's still normal. Okay, so let's go over why I'm saying that it's normal. So what you want to do is you always want to do that 50% retracement, and this is an art. So I'm going to start it off from here to, let's go back to the 12th. Oops, wrong direction, Mike. Okay, so from here to here, and I'm going to say we can expect it to pull back 50% to be normal and natural. So it's really anything materially that it's living below that 50% for that move. So we're going to say that is the low of that day is 52 and a quarter. Let's see, 52. Oops, where am I? I've got my calculator out. 52.25 plus we will go 62 and 3/4. That's the high there. 62.75. That's 115 divided by 2. 57 and a half. So 57 and a half is our area. So really kind of the high of this day that we're saying it could come all the way into there and still be normal and natural. So you're preparing for that. So when that happens, when this happens and it comes in pretty much right in there and bounces back up, maybe you're forced to, if you got ahead of your skis or something, to reduce some, but that is kind of your expectation. It's not breaking your expectation. So you're trying to live through that. I'm talking to myself. So, because sometimes I can be too jumpy. So let's say we live through that. If we didn't live through that, as it goes back through 60, whatever we sold, we buy those back plus a little bit more. And so you had a 15% position that you hopefully lived through there, at least 15 and a half at this point. Now at this point, because now it's truly breaking out, and let's look at it on a weekly. Looks really nice. RS line looks solid. So we are going to, make this a 17.5% position. But that's what I'm thinking, to myself. Now it's a little bit more. Maybe I'm making it a 20% position. It's 11% from that standard pivot. Okay, bad day. Now let's do this again. We're going to do the 52 and a quarter. This really helps you with these pullbacks. 52.25 plus, what did it get up to? 67.58, 67.63. 67.63 divided by 2, 59.94. So let's say that's like right here, right? So it just goes a little bit below what was 59, 50 is where it closed at. So just a little bit below what we were saying is normal and natural, but it did hold above its 21 day. So now at this point, I'm saying, okay, I'm using this as my line in the sand that used to be over here. Now I might not blow out the whole thing, but I'm going to start reducing it there. You want to keep ratcheting up your stops, at least on part of your position, and you've got to know that we're probably going to get stopped. But my expectation is we're going to get stopped out if it closes below that. Now, an intraday move below that, you might be able to withstand and with just selling some, but it's really the end of the day if it closes below that. And I don't remember what happened, but to me, with that type of selling, you're down 6% that day, down 4% that day. You're expecting like at least down 3 or 2%, at least on a closing basis. Let's see what happens. Oh, that's really good. Okay, so this is something that Bill taught me. When you're coming down, where you want to know where you're getting support is if your declines start getting smaller. So let's call it 7% down to 4%, and now less than 1%. So it's getting support at its 21 day. So while I wouldn't add to it on that day, I'm feeling even more confident there, and then thinking that if I did sell anything, if it makes it back above there or there, I'm going to be adding to it. Okay, it comes down a little bit more. Close underneath the 21 day. RS line is going back below here. So you've got to sell some at this point because you've got two of those, triggers going on. So, if I was at a 17.5% position, I'm going to bring this down, 15, maybe down, well, let's just use the quicksand rules and say we've got to bring this down to a 10. Now, there's something, that also, like getting out of the starting gate, one of the things I'm working on is maybe not using these quicksand rules until you're on week 2 or 3 or something like that, out from the breakout, or some amount of time and some amount of the percent. But for now, we're going to say that triggered that, so you've got to bring it down to a 10% max position. So we went from maybe a 20 or a 17% down to a 10%, and that's just the reality. And let's look at the oh, that's just the end of the week. We need to change that. Okay, so firm's up there. And now I'm really happy that it was able to survive this on a closing basis, and even happier on an intraday basis, but still not enough of a reason to buy those shares back. So I'm back down to it. I'm still at that 10%, and I'm saying, okay, if it can get back above here, I'm probably going to raise this up to a 15% because it got support in here. Okay, so as it's going through this level and this level and this level, I'm increasing it. So I've probably, made it, 12.5%, 15%, and a 17.5% position. And just knowing myself now, I'd make it a 20% position, but I'm trying to tame myself down. RS line is back in a healthy thing. So we're going to say a 17.5% position. And if it makes it, if we make progress, then up here we're going to make it even bigger. So 17.5%. Now we're going to make it a 20% because it's moving up. I like to average up, obviously. Still normal and natural. Still, what did we say? 17.5, 20%. Normal and natural. Okay, so adding to it on this day up here. So let's make it a 20 to 21% position. So we're not at a max, but we're getting up there because look, we've spent 1, 2, 3, 4, 5 weeks in this, so over a month. And let's look at the weekly. It's looking good. That RS line for the first time is starting to look nice. Normal. And add to, okay, at this point now, an inside day there, a nice day there. I'm making it at least a 22.5% position. I'm trying to remember, I'm not going to add more than 25. Okay, now at this point, I'm making it a max, 25% position. And now on the way out, I've got some stops. I've got a stop here for some of my shares, a stop at the 21 day for some of them, a stop there for some, a stop there, a stop there. You don't have to have one place, but just gradually, maybe even sell like 2.5% position with a close underneath there. And a lot of these are going to be on a closing basis, not necessarily intraday basis, but we're making this 22.5 to a 25% position. I'm going to lean towards 25% the more I look at this, because anything more and it's going to be too far extended to really add to. Okay, character. Okay, because of that, I'm going to make it a 22.5% because it closed underneath that, but not in a material way, but rules are rules. Okay, if it can make it back through here, I'll make it back to a 25. So I've gone from a 25 to a 22.5. Okay, so now at this point, I'm making it back down to probably like a 17% because that's odd. I'm going to make it back down to a 17.5. So we were at a 25 and I'm bringing it back down to a 17.5. I'd rather sell early than, it looks like it wants to shake out below there and this RS line is coming in. So with that in mind, in fact, yeah, I'm going to have that between just to protect myself, between a 15 and a 17.5% position at that point. Yeah, that looks like that's going to fail. And if this RS line goes below here, it's going to force me to bring this down to a 10% position because it'll be a quick signal. Again, if you don't know what I'm talking about with quicksand Grateful Dead, go back and watch that other video. So we are going to go, okay, yeah. So we got to bring it down to a 10 percenter because we're still in the zone that we can't really use the weekly yet. So now that's a 10 percenter. It's frustrating, but this is what happens. It really is. And why I'm leaning towards saying that, like using the holding rules for like a little bit further out in time, the quicksand rules. But, for now, we're going to be using it this early. That firms up, but still 10%. Okay. And sometimes you got to ramp this stuff up. The RS line smoking higher, back up 10%. It was just really a shakeout. And so you shouldn't make this big of a move, but I know me, I want to bring that back from a 10. I'm going to double it up to a 20%. But I'm going to tone myself down. In real life, I'd probably make it a 25. I'm just being honest. But I'm trying to learn and I'm trying to tone myself down because that's where I get myself into trouble, because then maybe the next day you've got one of these and you've got this like pressure, where you close down here and that would still be normal and natural. So I'm going to go from 10. Say I'm talking to myself, what would make the most sense but also be realistic? Because you want to be realistic in minimum 15%. I'm going to make it 17.5%. I'm going to split the difference between where I really want to go. 17.5. Let's see what happens. Let's see. But I'm nervous. Like, I'm seriously nervous. If you're not nervous as you advance, then you're not putting yourself in that mindset of what happens. Because I've been getting chopped up. Like, I'm feeling the paper cuts. Now I haven't done the math, but net we're probably up a little or down a little bit on the trading, but we're certainly not a material gain on here because of the, we do have some cost basis down in here, but we've been getting chopped up in here, so I don't have the warm and fuzzies on here, but there's this potential. So man, I'm nervous. Yes. I lived through it. I'm not happy that I made money. I'm happy that I didn't get stopped out. That's what, like, the excitement. You never want to get excited about it going up, but you can get excited about not getting shaken out. I do. So here now, with this type of action, you're thinking to yourself, okay, how do I get this up to a 25% in a logical way? So I'd gone to, 15 to 17.5 on this day. So I'm making this a 20 to 22.5% here. Now I've got to wait for a better entry to get it up to 25. So let's call it 22.5. And again, let's do our 50% retracement of what to expect. So we can go from here to here and say, let's just, without doing the math, say that's about half. That's our expectation, that it could come into there. And so mentally, that's why we're not excited. We're just happy that we didn't get stopped out. But that's what we're mentally being prepared for. And in fact, you might want to even put that in your spreadsheet. Like if you've got a spreadsheet with your positions and say that I didn't really close at 73 and 5/8 or 73.63. I closed at $68, and put that in there so you're mentally prepared for what can happen the next day, and you hope that it doesn't. Okay, well, there's a time to hope, and that's when you're at a gain. Time to fear, that's when you're at a loss. It's holding in there tightly. Okay, so now at this point I'm saying if it can get above here, I'm going to go ahead and make that a 25% position. But as squirrely as it's been, to me, it feels like it wants to undercut this before that happens. Let's see. Oh, Okay, now we make it a 25. So we make it a 25 percenter, and then we're going to use this as a stop for some of our shares. That is a stop for more, and the 21 day for a bunch, and then certainly maybe our final line in the sand there for our quicksand rules. So now we're out 40 days and 40 nights for you Muddy Waters fans from this pivot. We can tell that by up here. So 40 plus, a few there. So about 8 weeks. So now this is when we're thinking about switching over to the weekly quicksand rules. So we know that we're getting very close to switching over. So we might do, half and half, half quicksand after 40 days, or half daily, half weekly for the quicksand. But for 13 weeks, we're going to toggle over. So let's go another day. Okay, so remember, we already have our 25% position. Okay, still acting normally. Let's look at the weekly. It's a Friday. Okay, and remember, we're blending the two of the weekly and daily. We have a max position, so we can't add to it. Can't add to it. We've got our 25%, and that 25% is probably more than 25% right now because it's appreciating probably more than the rest of your account, but you don't have to sell it down. You can let that your winner run. And let's see. Okay, so now it's through the Livermore 100 and we've got our 25% in there. And now we're up 12 weeks. So we've got one more week of using the combo of the daily and weekly, and then we're going to just switch over to the weekly. Okay, so that was our week. Okay, so now we're up here. So what we're saying is now we're up 13 weeks from our standard pivot. So we're going to switch over and use the RS line quicksand Grateful Dead rules on the weekly, and this will allow us to hold some of that wiggle and wobbles. Now, that doesn't mean you don't use the daily for some of your other trades from, like 25 down to 15. And in fact, maybe what you do is you're using, from 20 to 25, just using offensive sell signals, but using from 20 to 15, using daily quicksand or Grateful Dead rules. So that's that's something I'm going to be thinking about, and because I'm trying to blend. And this is, my thought process on something that could take me a year or so to figure out. Like, I'm just letting you guys know, and you want to be like, you try some things out, and if it worked out perfectly on Qualcomm, big deal. It needs to work out on a bunch, So let's go forward. Okay, so now we're going to switch over to the weekly. Go 1 week at a time. So we've got a downside reversal there. So we're going to expect further weakness. Oh, wow. Okay, we got to switch over to daily, see what happened there. So it came in. Okay, let's go 1 day at a time. Let's go back here. So we had some volatility up here, but that's normal at that point. It's so far extended in there that your expectation is for it to come in. And really, you can say, like, from this low, from 80 up to here, what was that, like 177, so like your midpoint, or let's just do the math on here. Let's say we're going to use this high 82. So let's just do roughly 82 plus 177 divided by 2. 129, let's just call it 130. So 120, 130. Okay. So here would be the area that you're saying it can come into using that 50% retracement and not even be abnormal. That's normal, not abnormal. So it's still doing what is reasonable, right? So let's go 1 day at a time. So still reasonable. 124. Okay, so really from 124. So from here to here is what's unreasonable. So, but with this, it's come down so much, it's down 12%. Maybe you've gone from a 25% position down to a 20 because you've got your quicksand working on your daily. All right. So, and we were just talking about how we've switched over to the weekly for that quicksand rules, but it's the last 15%, right? In chunks of 3, but from 15 to 25% position, you can use other cell signals. So one of those cell signals could have been it broke out of this little flag type of formation and came back in and closed there. Maybe you reduce it from a 25 down to a 22 and a quarter. You broke your 21 day and you sold that down to a 20. But then also, if you hadn't used those rules, you could use your quick rule here to bring that from a 25 down to a 20. But remember, our weekly is what we're using for the last 15. So let's go forward one day at a time. Okay, so it firms up. So now this low becomes very, very, very important. And maybe you've even increased this because now it's come in and it's stabilized. And now it's in the northern hemisphere of this. Because remember, we said 130 was the midpoint. So now it's back up there. Maybe if you brought it down to a 20% position, maybe you're at least toying with bringing it up to a 22 and a half or maybe a 21 or something like that. But your expectation is for it to move higher. Your expectation wasn't for that type of move, right? That's a luck move on some sort of news or something. So up 38%. So at that point, you've got to make it back to a max move. Now, I'll just tell you, I remember hearing through the grapevine, and I don't know that this is true, but that Bill sold, and again, this wasn't from Justin or anyone. This was just rumors around the firm because the info used to be really kept tight, but that Bill had sold a third of his position during this pullback. And I cannot blame him at all. Like, at all, right? Like, look at that. Like, look at what that was doing down in here. Like, how could you not do that? So that, I think that's totally reasonable, but that he was upset that he got shaken out. And to me, that was like, no, it's like he was managing risk, if indeed that is the case. And then he bought it back up here, which is exactly what you should do. So to think that you're going to just buy something once and sit with it and sell it once, like maybe, like if that's your style, but that's not very realistic. It could be done. I mean, you could study that style, really could. And I mean, maybe I'd do that for one account, small account, and try it out. Like lots of times when you have ideas, just trying it out in an account to get a feel and just not add. But I think pyramiding is such an important part, putting good money after what's working that, wouldn't be in a big rush, but to try that out. But I'm always open. So regardless, you're back up to a max position here. So a 25er at this point. And that's, a lot to learn from that one. So now you know that it can give back a little bit more than 50% of its move and still be okay. Now, where we started that move is debatable. Like you could have said that 50% retracement was really from here to here, then it would be completely different. So let's call that 70 up to 177. So 177 plus 70 divided by 2, 123 and a half. 123 and a half. How low did it get? 123. So, that's fascinating. From there to there, that was 50% retracement. So, like I said, it's an art. Okay, so it's just running, and we're gonna, at the end of this week, we're gonna switch back over to the weekly. Okay. And again, we've at 13 weeks, we're at 17 weeks right now. On 13 weeks, we've switched over from using the daily quicksand over to the weekly. So we've kept at least that 15% core. Go out another week, no signals, no signals. Test of the 10-week line with no signals. And this is why you use those, is because it's, coming in gently on a relative basis there. Let's stay away from the daily for now, just so we can get through this. Well, now let's go back to that because that's important. So if you had sold any in here with this, right? If you trim some down to, let's say 20% or 22.5 or something, which would have been totally reasonable with the close below your 21 day here or here. So let's say you had made it a 17.5% position. Heck, let's say you made it a 15% position, which is totally reasonable, right? Because it's coming in and it's coming in more than what you thought, and it's going to test the 50 day, and the test of the 50 day could have come into here. Plus you have these. So let's say you bring it down to a 15% position because you're using your quicksand Grateful Dead rules on your weekly right here. So this line here has not gone below here to keep you in your last 15%. So let's say you were, because it's totally realistic that you've sold that down. Certainly think about it at the low of this day. You sold that down. Let's say you sold it down to a 15% position. At the end of this day, I'm probably bringing that up to 17% because it's an upside reversal at a 50 day. In fact, I might even make that a 20 or even a 25% at that point, because now I've got a clear line in the sand, and my expectation is that that's going to hold. And then it doodles around for a few days, and then you get another upside reversal. So on that day, if I hadn't already made it a 25% position, I would have made it close to it there. And then on this gap up, even if it was at the high of that day, as it breaks back through 100, I'm going to have that as a full position. So this is going to full position again, 25%. So even if we sold through here, totally legitimate, it closed below the 21 day, or really well, let's go back because this is important. Let's go back here, 519. So this upside reversal at 21 day, if you're adding there, if you weren't already full in, I'd be adding there with that as my line in the sand, saying anything I add there, I'm going to hold unless it closes below that. And then go out another day, it's not working out, but here it closes below that. So anything I would have bought there, I would have sold plus some more, plus this RS line is going through there. And then doing nothing, now you get your upside reversal that we're adding to. So hopefully that made sense. Here it back is on the weekly. Let's go over to the weekly. Nice support at the 10-week line. So if you're just trading off weeklies, you are gunning the heck out of that. 71% closing range on a weekly first kiss of the 10-week line. I mean, that's a gimme. You're loading up on that, frankly. There it is, like if you didn't load up down there, you're certainly loading up there. So you've got to be at a max percent position, whatever that is. If your max percent is a 2% position or a 200% or a 3% or whatever, in our case, 25, you're maxed out there. We'll go 1 week at a time. Okay. So you can't really add to it because you're maxed. Your max is not giving you any sell signals. So the beauty of the quicksand Grateful Dead is it keeps you from overthinking. And I'll repeat that. Webby, the benefit of the quicksand Grateful Dead is that it keeps me from thinking. We know what Livermore said. It's your sitting, not your thinking. So, because I would get myself all tied up in knots on these daily charts, reading too much into it. So there's a time and a place to lean heavily on the weekly, and that's really once you have a massive gain. And this is up a 400% gain. So you're on fire. So you are on fire, man. Then just building. Test of the 10-week. Successful test of the 10-week. Not as powerful as last time. RS line is still forming up. If you had anything to add, you're adding there. It's moving up. Pulling back. back to your 10-week line. That's some significant volume. That's a little spooky. Let's look at that on the daily. Yeah, that's some heavy, realistically, that's a hard one, so like, but also you want to think, and I'm going to be thinking like in terms of once you're up X amount, maybe just switching over to the weekly exclusively, like, up 20 ATRs or 30 ATRs or 200% or something, switching over to the weekly, because what the daily is going to do is going to get you out at a much better price, but it's going to get you out a lot of times. So it's really tricky between the two. Let's see. It looks like we're going to get a quicksand here on the weekly anyways. So what it could be, and it doesn't trigger there, and I'm saying this could be because I'm going to listen back to these and take notes for myself as I'm going through this, that could be that you're using the daily if the weekly is so far stretched from it that you're not going to get any signals anytime soon. Like meaning, here, like you're at such a huge distance from your moving average, or could be that you're coming close into it, that you might as well use it to get, if it's almost inevitable that it's going to trigger, which this one looked like it was, that you go over to the daily and start reducing. Because remember, you're trying to get it down from 25 down to 15% before the quick signal on the weekly. So maybe with this day in here closing below your 21 day after a really bad day down 12%, and you've got your quicksand, that you're bringing that into like a 20% or even maybe even a 15%. And this, you would have done some selling in there too, which you would have been adding. Oh, we already talked about that. Oh no, well, that was over here. So very similar type of thing. So it tends to break the 21 day. We've seen a lot of these model book stocks not break the 21 day during the move. So it likes to break it, but it's holding the 50 day. So that's info that it's giving you. It's saying that it'll get support around the 21 day, but it's not going to hold it. It does hold the 50 day. That's all very, very important info. So reducing this down, I'd say realistically, you have somewhere between a 15 and a 20% position at this point. Let's go out a week. And so at this point, it never triggered that, but it did undercut this. So I think that's more realistic too, because you get a close below your 50 day, and your first close below it. So I think, again, it's realistic to say that you would have brought that down to like a 15% position on that day, because, come on, man, you're up 400%, and this shows it at the end of the week, but you're at this point, you're thinking, man, this is going to come way in. And you're really on the brink of this quick signal here. So bringing it down to a 15 is reasonable, and then saying, I'm not going to bump it back up until it gets above there. So let's see how that played out. Probably buy some back, maybe make it a 17.5% position there, and then using this as my stop on those. Now maybe making it a little bit more, maybe like an 18, 19. Okay, now I'm making a 20% position, and then I'm using this as my stop on those shares. So always think, where's the stop on the most recent shares? Let's go out a week. Just doodling around. So it's still, it's still not warranting a full position. Like maybe you bought some up here, but then sold some of those later in the day when it didn't hold it. But you're probably in a 20%. And what's interesting is you got this pullback and this pullback. So, and you have this pullback, which in this pullback. So you want to study each one and kind of look at the percentages of each one and see what they are to get a sense. In fact, I'll do that. Let's do the 119 point, 119.75 minus 86.06 divided by 119.75. Okay, so that first one was a 28%. So from here to here, that's 28% there. And then let's do this next one. We should really just have these percents on here. This is silly. 167.25 plus 135. Minus. Oops. I know there's a million ways of doing this that are easier than what I do, but I just do it old school habits. So that's an 18%. We'll call it round up to 19%. So this pullback here is 19%. And then we're going to do the last one. 198.63 minus 152.28 divided by 198.63, 23%. Okay. So we know that this one was 28%, this one was 19, and this was 23. So we were expecting that, that's where you tend to get support in like let's call it the 20 to 25% pullback. So as it makes new highs, we're thinking, okay, 20 to 25% on each one of these and we put that tool in there. And you can do that for any stock, and you should really do it in terms of ATRs, but this is just easier for right now. Okay, so it's really tightening up after this action, go out another week. So it's moving up nicely, and really that is really powerful action. So I this was a setup day. Let's go to 10.5. We talked about that in the JDSU one. That is a setup day where it's a phrase that I've coined, that when you're near an area of resistance, which is right here, right here, right here, like there's lots of areas of resistance, and you got a tiny spread closing at your highs, your expectation is that the next bar is going to move up. So this is why I call it a setup day. On top of that, you get your round number, your Livermore number of 200, and we saw how that handled itself through 100. It tried to move up, rapidly there. So let's go through. So, you've made it a full position back up to a 25. So it's pulling back in. So now our expectation is that let's calculate what 20% on this would be. 224.69. Oops, wrong thing. 224.69 times, let's do times 0.8 for 20%. So 179 and change, let's call it 180. So we're saying that we think it can come into about here and be normal given these. And that makes sense because it's also at the 50-day that it got support around there. But the other thing you want to look at is, what is this? What is this looking like? This is looking like an ascending base, right? An ascending base, we should do one on here, but you get 1 pullback, 2 pullbacks, and 3 pullbacks. Each pullback has to be higher than the prior one for it to be valid. So then we have a final line in the sand, a 152 and change over here. Because if it goes below that, then it's going to form a bigger base, or it's done. So with that information, we're saying, okay, it's an ascending base. The pullbacks before were 19 and 23%. So we're saying, 20% is kind of our base case, but really less than that, because what I found when I did a big study on ascending bases, basically when I was building pattern work out, is that your first 2 pullbacks tend to be about the same size, and your last one is shallower than that. So if your shallower was 19, let's call that like roughly 15% is what we think would be normal if this is an ascending base. So again, what was that price up there? A 120 or 224.69. So 224.69, and we're going to multiply that by 0.85 to get a 15% pullback. So 190.98. So let's call it 191. So how low did that get? 191. Okay. So this is in the realm of possibility that that's as low as it gets. So we now have some expectations that we think that this is kind of as low as it really should get, could get down to here, but we know it's a broken chart here. So this gives us context And we're sitting there going, you know what? We're going to hold our 25% position because this is holding up so much better than what the market is doing, which is another characteristic of an ascending base where it holds up while here's the NASDAQ is back underneath the 50. So looking at this saying, this is pretty powerful. But so we're going to hold our max. Let's see if it does go lower. It goes a little bit lower, but not much on a closing basis, still above our level that we said. Now it's just going sideways. Let's go out to the end of the week. Okay, so it moved up. Let's go out another week. Okay, so now, what was that pullback? 224.69. 224.69 minus 189 divided by 224.69. So 15 and change, 15.8. So it was right in what we were thinking for an ascending base. So that means as it goes above here, we want to add heavy, right? But we're already at a 25% position. But if we weren't, we would increase that. So there we go. It's out of there. So if you weren't at a max, you're at a max now. And look, from 200 to 300 in a blink of an eye. Let's go out another week. Wow, now almost up to 400. Some climax action. So when you're extended that far, right, and you're moving out, I mean, this is climax action. Whether it's climax top or not is a whole topic. But yeah, that's climax action. Go out another week. Now, normally with a climax, you kind of fall apart afterwards. If this was a climax, this day would have been normally down like here. That would have been normal. Like, let's look at Schwab. So Schwab had a climax in here, and look at what that did from here to here. Like, that's a normal end, 77 down to 47, blink of an eye. That's what happens after a climax. And this, lots of times you don't know it's a real climax until after the fact that it held in there so nicely. That is just bizarre. Oh, that's a bubble for you. Okay, let's see. Let's go out to the weekly. It's holding in tight. And again, you've got to, anything that you've got to push out of your mind. Okay, so what is this looking like? This is in the spirit of a high tide flag. You ran from like 180 up to 400, or you can say you ran from like 220-ish up to 400. So regardless, and then held in tight. So it's really a high tide flag type formation that it's forming on top of that ascending base. It's super powerful. And the fact that it held its 21 day here is telling you that 21 day is really meaningful. It's a little bit of wedgie type feel in there, but still we saw a lot of info around the round numbers, 100, the 200, the 300, the 400. Obviously, there are a lot of players in here that are Livermore fans, if you catch my drift. So now we're just thinking, 3 stacks of high society. One person got that. Okay. Now it's moving out. So you're maxed. If you weren't maxed already, you were maxed, right? Because now it's going out of this high tide flag. Now, the only question I have to myself is, when is max not a max? Like, should we have more than maxed out of there and put that as a separate trade? Like, note to self, like you're in you have a big position, you've got a max, and then it forms another base, which this ascending base, 1 pullbacks, 2 pullbacks, 3 pullbacks, breaks out. Would you want to kind of separate out and say you've got 25% of your original thing? Let's do this best fit thing where you were buying it starting here. Let's refresh this. You were starting here and you've lived through this 400%. Now it's coming out of here. Like, it might be legitimate to say you're going to lock that in, still use the quicksand Grateful Dead rules for that on the weekly, but then trade this other new position that can go up to 25% out of this next base. Like, it's food for thought, right? But then you still have that concentration risk there. Then you'd have 50% in this thing. And if it went all the way down, to here and some terrible news, which I've seen happen, and you're toast. So you really want to think through that from a risk standpoint. And some people are probably yelling and saying, what are you talking about? 50% in one stock? That's crazy. It is crazy. But Bill was probably 200% long this stock right here. That means if he had $1 million in the account, he's got $2 million in this, $1 million out on loan. So, that's an extreme, so let's go through this. Got another week. Wow. Oh my God. I forgot how powerful this was. And I missed this whole move, man, because, I was trying to prove something, and this was already on the NESME list. So I wasn't buying stocks that were already on the NESME list. Primarily, I was just buying stocks that weren't on to try to prove to Bill that I knew how to buy them before him. That was a mistake. But now it's getting wild and crazy, right? This is an SNL for you. Not a savings and loan. Okay, so just trying to see if you guys are paying attention. So here we've got the end of the year. We knew that at the beginning of the year, the thing really started its move. There's this whole concept that Bill has about 12-month tax selling and stuff, and we'll get into that some other day. But really, we're just looking at the chart. RS line is still well above here. And you've got stalling action, you've got these splits in here, and that's why it's showing 200. But this is clearly climax action in here, just like this was climax action, and it's coming in. Let's just go day by day and see. We're going to use that 21 day, as part of our. We're using. We've got our 25% position, right? Because we weren't doing that 50%. That's something we're going to test out to see how we would trade that. And then, and maybe even doing that twice, because you also had the high tide flag. So one for the ascending base, one for that, that's something I got to look into. But anyways, we are using the 21 day as well as the daily quicksand Grateful Dead to try to help us get it from a 25% down to a 15%, because we know that we're going to use the weekly for that last 15. And so with this one, you could have been recognizing that it's a climax and selling into that. But if so, you would have been doing that over here as well, which is fine. Because if you're selling into that and then buying back more over here, that's totally fine. Like making it back up to a 25, as long as you're holding your core 15. Nothing wrong with that. In fact, you could probably study this time frame in depth, bar by bar, in serious depth, and probably spend hours on that and really learn a lot. In fact, that's something I'll probably end up doing. And you guys should do that too. Just go bar by bar and then test out theories and just take notes and just go, well, what if, what if, what if? And then if the what if works perfectly on this one, it's meaningless. That's data fitting. But then, which is kind of how Bill would do things. Because remember, we talked about him marking up the absolute top and then saying, oh, you'd sell it here, because that was kind of what he was doing in a way, was this theoretical. It was like, okay, here's the absolute top, and then try to look for other times like that. But, I just approach it a different way. But now this looks very toppy, right? Because this is all over the place in a short period of time, straight up, straight back down in this short period of time. That does not look right. Like, look how different that looks than this. So when this came down, let's go over here to the 17th. When this pulled in, really normal and natural, right? Nice and gentle. But when this pulled in, wait, no, we weren't there. No. Where were we? Help me out. What? Can't hear you. I know. I did that too much. Let's go forward. Let's just do a day at a time. I don't remember where we were. Okay. I think we were there. I'm pretty sure. So here, let's say, from 100 to 200, you're, just roughly, midpoint is 50, and we haven't closed below that. But now we've closed below it quite a bit, right? Because we're at 140, but we're still above the 21 day, and RS line is through here. Now we're getting support at the 21 day. So now this becomes a major line in the sand for me. I'm saying if that gets broken, I'm going to bring this down to a 15% position because that was excessive selling in there. But it was the turn of the year, lots of rotation and all. But that's going to be my line in the sand. And let's look over at the weekly. RS line is still above that, and that's for our last 15%. But from 25 to 50, that's going to be our line in the sand. Oh, nice. Was not expecting that. Yeah, that's more, what do you think? Weak action. Okay, so you've got a quick rule here. So I would bring that from a 25 down to a 20 because we've got all that other stuff. Now it's living in the lower hemisphere. So if we said northern hemisphere is 150 to 200, the bottom is over here and it's starting to live under here. So that's another reason to bring it down to a 20. But this here is going to be my line for the last little bit. Oh, it's still hanging in there. Hanging in there. Wow, it's looking good. No. Yeah, that should have really, if it was going to get going from there this day, wouldn't call it an expectation breaker, but my expectation was for that to take out and it didn't do it. So that's not a reason to sell, but a reason to be like, okay, maybe we're going to be in this big base. Ooh. Okay, that's really bad action. See, it's abnormal. Okay, so now we went through here, right? So we're well underneath our 21 day. We've got a gap down 16%. It did find support at your 50 day. So I'm bringing this down to just my quicksand Grateful Dead rules on the weekly because this is but this is only a Wednesday at this point. So we've sold those other shares, and this is cratering through here. Now it's closing underneath your 50-day. Okay, now material a break of your 50-day, and giving a lot off the top here, but that is just the reality. And you had your quick rule here, so now we're down to a 10% position using this. Let's go out a week. Okay, let's just go back. So over here, when this stuff had happened, that we were down to a 20% position, and when this happened, went from 20 down to 15, and now on this day, now we're just down to a 10% position because of our quicksand rule, or a quick rule. Now we're waiting to see if we get a quicksand. Just meandering. Base building. Ooh, okay. That's everything. All right. Horrible way to end. Down 30% on that week, but this triggers everything. Quicksand, Grateful Dead, RS line move through here. Also move below that lowest point over there. Let's look at it on a daily. This, no matter what, like now this is a broken chart, right? And a lot of people in this position are still thinking they've got a $200 stock. Well, they don't have a $200 stock. It was $200 for a blink of an eye up here, and if you didn't sell some in there, which I think Bill sold a bunch in there, that you've more realistically sold somewhere in here, and then some in here and in here. And so now at this point, there's no reason to be holding on to this. And so let's go over to the weekly. Let's just toggle the monthly. Monthly's still hanging in there, which is, let's just go week by week. It's totally broken. Let's go out to the end of the, let's go out a year. The end of the year. Why you just don't say that Qualcomm is this great stock, best stock ever. Let's go out another year. Go out another year, sitting, waiting. Oh, I remember Warren Buffett said, it's you've got to, know what you own. It's quality. Don't sell. Let's go out another year. Let's go out to your monthly to see where the monthly finally triggered here in May. So worst case scenario, even on a monthly basis, you're out over there. And then let's just go to current. Here's your current monthly. Let's scroll out. So look at all that time. If you didn't sell over in here, it took you, if you were waiting, it took you until 2012 to even get back there. And then you were back underneath that after that. So again, let's stop sharing that. Let's share how Bill did it or said to do it. And again, here is where he was buying it down in here, saying to add, never sell, 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 but sell the whole thing up there at 200. Well, if that's indeed the case, 200% long, that would be like a 5,000% gain that year, and 400 to 500 wasn't. So we know that just it wasn't done that way. And so again, another reason of learning and studying. And let's say you don't like the quicksand Grateful Dead rules and you just want to use the 10-week line on here, then use that. This is a poster child for that. Your first real break of your 10-week line didn't happen until up here, at the top. Like this whole time, you don't get a break below that. So another rule that you could just put in there is say, okay, well, until I get a material break below my 10-week line, a decisive break below it, I'm going to just sit with it or sit with a portion of those shares. There's nothing wrong with that. Like you don't have to just, even if you use the quicksand Grateful Dead rules, you don't have to just use that. You could also take, your lowest point over X number of time, like a trailing, like 4 or 5 week low or an 8-week low or a 13-week low. There's a million different things you can do. You can use marked highs, marked lows, 50-day, 21-day, 200-day, 40-week, test out different things that work with your personality. Like this is what worked for Bill's personality. This is how he marked it up. And this is how he would mark it up for himself. He wasn't trying to do a Monday morning quarterbacking for other people's sake. This is how he liked to study it for himself. Because I studied all of his model books. I had access to every single one, and I spent and stop sharing. I mean, I spent 30 minutes to 45 minutes a day with a magnifying glass, staring at his books with his markup, his model books, learning through his eyes, through his writing of how he looked at things. And he was the billionaire. I'm just some random dude with a little YouTube channel, man. So like, who do you want to listen to? I would listen to him, but I'm just trying to help you out. So hopefully you learned a lot from this. This was really epic. I might have to do this again at some point, like maybe circle back and do this a year from now, like after I've really worked out the blending of the daily, weekly, monthly quicksand Grateful Dead rules and when of switching. But this was our first one of, again, what we're thinking about is saying that we're going to use the quicksand Grateful Dead rules only when you're up on something, up a decent amount. And so we've got to figure out what that decent amount is, because we know that it will give you a lot of choppiness out of the starting gate. So it might be something that we say we've got to wait until we're up 2, 3, 4 ATRs before we implement it, average true ranges. Or let's say up 20%, we're up 20%, and then we start implementing it. And then how much time or percent gain do we want to switch from using the daily over to the weekly to get less chopped up? Or are we going to use the daily for just, part of that? So there's lots of things, there's lots of learning to do, which makes it just fascinating, and I just love this. So with that said, I hope you guys have learned a lot from this one. I learned a lot. I learned a lot from this one as well as the JDSU that we did recently. I think that would have been released before this one, most likely. So I hope you guys are learning a lot from this. Please go back and watch the other model book series. If for some reason you made it through this thinking you didn't have to watch the quicksand Grateful Dead rules, I think you realize you probably should have listened to me and go back and watch that and then rewatch this. It'll be worth its weight in gold. Trust me. Like, this helps me out so much when I'm trading, because I'm thinking like, okay, well, what would I say to do back when I was doing things like this with Chuck at the chart school? At the end of the day, we'd do these animations we'd walk through, and kind of like what we're doing here in a way, loosely. And we'd say, okay, I would buy here, I'd sell here, because you're trying to think in a perfect world, what would you do? And then when I was in the true battlefield in my own account, and I wasn't sure what to do, that happens all the time. You're not sure. There's a lot more than a touch of gray in the market, and you're going, man, what should I do? That then I was like, okay, what would I tell people to do? And I still do that to this day. And that's typically a better decision than how I'm feeling. How you're feeling really has nothing to do with anything, right? So anyways, that's that. So I don't think I have anything else to say on that. So if this is your first one, at the end of these, we switch gears and we move into music. Just something fun I like to do. And these days we're doing one album at a time. So kids, grandkids, who do we have on today? Well, we've got one of my all-time absolute favorites, Jackie Greene. I think I wore this once before early on in one of the shows, but this is one of my favorite t-shirts. I got this when the last time I saw Jackie and went down to San Diego and met my son, and my daughter came down, and we went to go see him at a small club. What was that club? The Belly Up, tiny little club there, and we all had so much fun. And I got one of these for each of us, and so it's a very special T-shirt for me. But we are going to talk about again one of my favorite artists, and that is Jackie. And let's share where you can find him. We're going to go over kind of a compilation album. So this is. Well, you know what? Let's do it this way. Let's go out to the beginning. Let's just go out to Jackie. All of his stuff is not on Spotify. Some of his stuff, because he's an indie type of artist, so some of his early albums, or at least one of them, Rusty Nails, wasn't on here. There might have been more than that. So let's go in here and go down to albums. So these are the ones that were released. I think I've talked in the past about Gone Wandering, but we are going to go over, and these are all great. All great. He hasn't put out anything bad, but we are going to go with the Dig Years album, which is really kind of a best of like the Gone Wandering, as well as the some of the other stuff like the Rusty Nails thing. So let's go in here. And so you've got his most popular song. If you've ever heard him, which you probably haven't, because he's not a huge artist, that you've probably heard Gone Wandering. I would certainly start with that one. But the rest of this is just filled with gems, like the Traveling Song. Georgia, that's such a special song for me, because I John Mayer's got a song called Why Georgia. You got the Ray Charles Willie thing, the Georgia on My Mind, and then this one, and those are all songs that I love. And so Saint Bernard, who was my best friend, who passed away on January 20th of 23, 10:52 a.m., and I'm still not over that, not even remotely. But anyways, she got her name partially from this song, and if you listen to it, you go, that's not a song about a dog. It's a fun song. Kind of reminds me of Rolling Stones. My favorite song of theirs, Honky Tonk Women. And then you got to listen to this one. Tell Me Mama, Tell Me Right. That's a great one. Sweet Somewhere Bound. That's a really nice, mellow song. Some other good ones in here. Mexican Girl was good. Um, this was the first song I heard him sing. By the Side of the Road, Dressed to Kill, and he was opening up at a venue in Orange County for Johnny Lang, and I'd never heard of. I was a huge fan of Johnny Lang, never heard of Jackie Greene, and he started off, and I believe he started off with that song, and it just had me hooked. I've been a fan ever since, and always will be. Great stuff. And then one of my favorite songs ever, Rusty Nail, the Rusty Nail. It's not that popular, but is very reminiscent in a way of 5 Long Years, that that Buddy Guy would sing, Freddie King would sing, Eric Clapton would sing, lots of people. Getting By, love that tune. Just really heavy, lots of heavy stuff. He writes like Dylan, in a way. Very deep stuff. Down in the Valley of Woe, that's heavy, and all these are good. Falling Back is, man, that's a sad one. Great tune though. Really love this stuff. So give that one a shot. Anytime Jackie comes to your town, I mean, the tickets prices are normally extremely reasonable. I would go and see him. I've traveled to go see him. Like he really puts on a great shows, normally in small venues, so that's always fun. He did, play with the Black Crowes for a while. Back in 2013, he actually joined. He was part of the band, and then they broke up. And then when they came back together, they didn't bring him in for some reason. They didn't bring a lot of the people in. Just, I think, the bass player, which was really messed up of you guys, you brothers, for not bringing Jackie back in and some of the other guys. Just not cool. But who am I to tell anyone what to do? And then he played with, Phil Lesh for a while. Rest in peace, Phil. Man, obviously the Grateful Dead. He played with Chris of the Black Crowes for a while. He played with obviously with Bob Weir for a while of the Grateful Dead. So he really, and it was listening to him in March of 2014, 2013 or 2014, when I went to see him at the Troubadour. And at the end of the show, he played a bunch of Dead tunes, and I'd never listened to Dead tunes, and I got hooked, and I didn't know it was even the Grateful Dead. And then, so he was my gateway into that, and I've become obviously a serious Deadhead ever since. So we'll talk about the Dead more in future episodes. So that was pretty much the end of the music stuff. I will say I would go to his website. There's a great song that he hasn't released yet, that is on his website, and that's the only place I've been able to find it. It's called Recession Proof. A great tune. We used to play it on IBD Live, but I need to get him to sign a document to give us the rights to that. He DM'd me and approved it, but we need something in writing now that we're owned by Dow Jones. I need to reach out to him, and I couldn't be a bigger fan, frankly. When COVID happened, he would do, like, you very often, I don't think they were weekly, but very often he would do an online thing from his house and just do a little concert, and then you could support the concert with a tip jar type of thing. And I would watch all those, and I would sit around and just, it felt like I was at a concert, and really it helped him out, because obviously anyone who's a musician or in that world, their income went from whatever it was to zero, and so you got to do something. And making records and stuff, they don't get paid hardly anything anymore. So, we did that, and I always contributed. Every time I watched, I'd donate, because it wasn't a donation, it was a payment. He was offering an entertainment, and it's only fair, everyone's on the honor system, and they would, donate, or at least some of us would. And so, man, great guy, great tunes. And one of my favorite tunes, he hasn't released it yet, but you can find some versions, and I've put them on in the playlist on the Webby Rambles on, uh, you know, in the little section with the music stuff, but it is Karma song is near and dear to my heart about karma. It's a very heavy, deep song. I would suggest just, looking through that list, and there's not good recordings of it, but that's a great tune. With that said, I think we're over now, and so hopefully you got a lot out of this. And remember, it's time to break out your credit cards, and I will give you my no credit cards today, folks. You do have tuition. Your tuition is to be kind to somebody, and I will include something, meaning an animal or of some sorts, any living creature. Just be kind, because I'm trying to start in just my little tiny way. I mean, just think back to, like, this real life person named Forrest Gump, who started walking across the country, and he brought a movement with him. And well, Forrest Gump wasn't real, I know that, but just think, little things can turn into big things. And so what I'm trying to do with this is, everyone who watches, you're on the honor system of, you've got to do something kind. It can be very small, like it can be tiny, like like, for example, yesterday after the show, there was a wasp or hornet or something had gotten into our house, into my office. And I'm like, most people would just kill it. But, I spent like 20 minutes that I didn't have, like with a broom and this little device that I have for catching, like typically like spiders or something. Or we got a frog in our house once, we've got a lizard in our house, and because we've got woods behind us, so they make it in. And anyways, to not kill it. And I spend the time I do that, and if you hear someone screaming, it'll be my better half, and she knows to not kill the whatever. And I'll go over, and whatever type of bug it is, I've got this little device that I bought from Amazon. You just click it over. It's kind of like, you just put like if you don't have one, you could just put a cup over it and a piece of paper underneath it to trap it, and then put it outside. So I did that with that wasp for like 20 minutes and put it out. It's just being kind. Like, you don't know how many feelings an insect has, or an animal has, or whatever. And why not err on the side of treating all life like it's worth something. Now, obviously, you got to eat. I've been a vegetarian for 34 going on 35 years now. And, maybe I'll do an episode on that and why. Not trying to convert anyone, but, you have to have, but you still eat, so yes, I've heard the argument that, well, I'm eating vegetables and fruit and this and that, and or cheese, so you had to get the milk from the cow, and, or the, which I've cut back my cheese consumption by like 95%. It's the only animal product that I have. So I'm essentially vegan, with the exception of cheese. But it's just a different way of thinking. I just don't like hurting things. That's me. If you're not that way, that's you. That's fine. But just put thought into it. Maybe I'll do the reasons why. And we'll see. But anyways, just be kind. Be kind to a person. Be kind to a family member. Be kind to an enemy. Every week, you guys know I'm being kind to you, because my enemies know who they are, and they know what I could say, and I choose not to, because I will always take the high road. But anyways, with that, and take the high road on things. When turn the other cheek. Look into it. It's a different. I think it's much harder. The easy thing isn't always the right thing. And if the wars, you just think about it, like wars that happen, typically over like religion, or power, or money, or a combination. And if folks just, and this has been going on for centuries and millennials, and like is that the right word, for thousands of years, that if people just had a different mindset and just said, okay, like, where can we find common ground? Maybe the common ground is you stay in your area and I stay in my area, and we leave each other alone. If that's got to be the common ground, there could be common ground that is mad, or if someone really wants a piece of land, like, okay, well then pay the right amount or share it or something. Like, there are solutions to every problem out there. Well, almost every problem. There's a problem I'm I'm struggling with it. I haven't found the solution for, and if I do, that'd be a good thing. So, anyways, with that in mind, hope you guys all have a very good and productive um, day out there, and I hope this you get a lot out of this. And I would watch the full series, and share it with a friend. Like, rewatch it, listen to it, and certainly do the fear and the goals one, number 11 and 21. I think that's what they are. And those are, you can listen to that when you're driving. You don't need charts because it's just me babbling on. But I think you'll get a lot out of it. With that said, until next time, peace out.